Deutsche Bank is a German investment bank and financial services company. Their headquarters is located in the Deutsche Bank Twin Towers, which can be found in Frankfurt, Germany. Their current chief executive officer is Christian Soing. Deutsche Bank has more than 100,000 employees working for them in over 70 different countries throughout the entire world. Deutsche Bank has locations within 2,434 branches in total across countries in Europe, North America, South America, and Asia Pacific. As far as products and services, they offer consumer banking, corporate banking, financial insurance, investment banking, mortgage loans, private banking, private equity, savings, securities, asset management, wealth management, trading, mergers and acquisitions, risk management products, fund management, and credit cards. Deutsche Bank has three business divisions, which include Corporate and Investment Bank, DWS, and Private and Commercial Bank. CIB combines Deutsche Bank's corporate finance, global markets, and global transaction business banking businesses. This business division was created in 2017 with the aim to ensure a greater alignment of products and sales efforts, while enabling the bank to deliver a better service to clients and a more focused resource allocation. DWS is one of the world's largest asset managers and have been recognized by clients all around the world as trusted sources for integrated investment solutions, stability, and innovation across a full spectrum of investment disciplines. Within this business division, Deutsche offers individuals and institutions access to their strong investment capabilities across all major asset classes and solutions aligned with growth trends. DWS aims to innovate and shape the future of investing. The Private and Commercial Bank Division combines Deutsche's expertise in private and commercial banking with Postbank in Germany and wealth management in one corporate division. PCB offers their clients high quality advice and a wide range of financial services from one single source. The comprehensive source offers range from retail clients to solutions for demanding clients in private banking and wealth management, and to businesses and commercial client coverage. Deutsche Bank was founded in 1872 within Berlin, Germany, by Adalbert Dielbruck, a private banker, and L. Bamberger, a politician and currency bank expert. Deutsche Bank started off as a specialist bank for foreign trade. Before Deutsche was created, German importers and exporters were dependent upon English and French banking institutions in the world's markets, which was a serious problem because German bills were pretty much unknown in international commerce and generally disliked. They were able to quickly expand into Shanghai and London in the following few years and even make their way into South America shortly after. The Deutsche Bank opened in London was important because it established credit for the German trade. Since founded in 1870, Deutsche stock shares have been listed on the Berlin Stock Exchange, then slowly over the years became present throughout other stock exchanges within Paris, London, Brussels, Tokyo, and New York. In 1872, Deutsche Bank made its first investment with an American financial institution by creating a limited partnership with the New York Bank, Knobloch, and Liechtenstein. From this moment on, Deutsche participated in one of their most major international projects, which was to help finance the construction of the United States railways. They were not able to operate under their own branch name in the United States until 1979, where they finally were able to open a branch in New York City. Deutsche Bank did not waste time starting to purchase other banks. They started off by expanding their presence within Germany by integrating Bergisch Markisch Bank and Schlesischer Bank by their respective branch networks. In October 1929, the merger of Deutsche Bank and Diskonto Gesellschaft was considered the largest merger to date in the German banking industry. Around the same time, Deutsche also had acquired two other well-known institutions with the name Nordische Bank and Schaffhausen Bank. Although they were able to successfully implement these other projects, it was not until the 1980s that Deutsche was able to purchase banks in Italy and Spain and create their own branch networks abroad. After these purchases, Deutsche was able to expand their purchases into the United Kingdom and United States. In 1989, Deutsche was able to acquire Morgan Grenfell, which was a UK merchant bank. Then in 1999, Deutsche was able to successfully take over the New York-based investment bank, Banker Trust, which was the largest ever acquisition by a German bank in the United States financial market. Before diving into Deutsche Bank's business strategy, let's take a look at their SWOT analysis. When looking at Deutsche Bank's strengths, it is extremely easy to identify that the firm has a strong brand name and good financial positioning. Not only this, but Deutsche Bank has a firm geographical presence all across the world throughout many different countries where they have around 100,000 employees throughout these offices. Looking further into their financials and operations, Deutsche Bank's R&D and wealth management has been sturdy and they are the largest foreign exchange dealer in the world with a market share of 21%. Moving on to Deutsche Bank's weaknesses, the firm has intense competition from other leading banks. Based off of their competitors, their firm's retail banking is significantly weaker. Looking into their financials, Deutsche Bank has non-performing assets and a consistent fluctuation of profit. In order to grow and expand, Deutsche Bank needs to take into consideration the opportunities that are possible for them to achieve. Some of these opportunities that Deutsche Bank have are the ability to expand to other countries that they are not already in, try to diversify their portfolios for customers, and take advantage of joint ventures and mergers. Lastly, some threats that are presented to Deutsche Bank are the changing in government regulations, possible financial crises, and the varying of interest rates that could affect their existing financial position. Deutsche Bank's overall goal of their business strategy is to make Deutsche Bank a stronger, safer bank that is well positioned to pursue growth opportunities through its strong global client franchise. In order to achieve their overarching goal, they have planned out a few accomplishments that will need to be achieved first. These accomplishments consist of having capital levels, being a leading CIB franchise with the scale and strength to successfully compete and grow globally, occupying the number one private and commercial banking position in the German market, giving their Deutsche AM division operational segregation that can support accelerated growth, reducing the size of their corporate center and cost base by providing more front to back alignment and shifting larger portions of infrastructure functions to the business division. And lastly, shifting their earnings and business mix more towards stable businesses. Once Deutsche Bank is able to reach all of these accomplishments, they believe they will have succeeded in reaching their overall business strategy goal. Not only will Deutsche Bank have to make some operational adjustments in order to reach their strategy goal, but they have also assigned financial targets that they think will increase their chances of achieving their business strategy. These financial targets include adjusting their cost of 22 billion in 2018 and 21 billion in 2021, achieving a post-tax return on average tangible equity of about 10% in a normalized operating environment, maintaining a CRR/CRD for common equity tier 1 capital ratio of about 13% at all times, achieving a CRR/CRD for leverage ratio of 4.5%, and targeting a competitive divided payout ratio for the financial year of 2018 and onward.
Now we're going to tell you about some basic financial information. We'll go over the balance sheet, cash flow statement, income statement, and some ratios and analysis. This is the balance sheet for Deutsche Bank for the last 3 years, and there are a few things that stand out over the course of that time. First are the shares outstanding, which increased about 50% from 2016 to 2017. And also notable are the cash assets that over the course of the last 3 years have increased, indicating that they may have been liquidating some of the investments as the investments and advances have gone down. And unfortunately, the deposits over the last 3 years are down as well, which brings down their total assets over that time. And the lower assets really come from the releasing the liabilities. So if you see the total liabilities on the right, they've been going down. So the bank has been kind of like restructuring its financial position here. Shareholder equity is up a little bit, but ultimately pretty steady. And we'll look more into how these changes have been affecting the rest of the financial structure. And here's the cash flow statement for the last 3 years. And again, there's some things that pop out here. There's a clear change, turning assets into cash and reducing liabilities. Um, if we look at the second line, the net income cash flow, um, they still lost there, but they lost less than they did the first 2 years. Um, and then the fourth line down, net increase, decrease in asset liabilities. There are definitely big changes there. Um, laying off liabilities to increase the cash flow, and the cash from operating expenses as well, and the decrease in investment. So the numbers there definitely show the trend of what's happening with the company and how they're kind of restructuring their financial position by laying off liabilities and increasing the cash and the shares outstanding. And one quite significant change is the effective exchange rate. A 209% change, not in the favor of the bank. Effective the exchange rate changes on cash. That's towards the bottom of the cash flow statement. And here's the income statement. A few things to point out on the income statement. First is notice the revenues have been steadily dropping, but interestingly, the cost of goods has been going up. Um, so naturally, the gross profit's been going down, and the earnings per share, there has been improvements, but it's still negative, unfortunately, for the last few years. And here are some financial ratios that help paint the picture here. The current ratio has been going up as they've been trading their liabilities for cash, but the gross profit is down. The margins are down pretty steadily over the last few years, and so as a result, the return on assets and return on equity, though there's been some improvement, they haven't lost as much, but it is still a loss for them. And here we can take a look at this cost of goods and revenue issue that we found in the other spreadsheets. One thing to notice, interestingly, if we go back to 2009 and through 2011, um, was the drop in the cost of goods and revenue. And that may have been due to the financial crisis in 2008, the year before, where activities ceased and actions changed from their previous behavior. Deutsche Bank operates in a few different areas. They act as an investment bank for corporate clients, recently doing an IPO for Aston Martin. And they're also a commercial bank with retail and private banking. They have over 1,600 branches throughout Europe, and they offer investment services, deposit services, insurance services. And through all this, they have an asset management firm where they manage assets for both private consumers as well as corporate clients.
For its competitors, here is the ranking list of world's top investment banks. They are Goldman Sachs, JP Morgan Chase, Morgan Stanley, Deutsche Bank, and Citigroup. This slide shows the brief introduction of these financial institutions. The Goldman Sachs Group is a global investment banking, securities, and investment company which is founded in 1869. It provides financial service from corporations to individuals. There are four main business segments in the organization: investment banking, institutional client service, investment and lending, investment management. The company reported the net revenue of nearly $32 billion in its 2017 annual report. As one of the largest investment banks in the United States, JP Morgan Chase is operating in more than 60 countries and is founded in 2000 when Chase Manhattan Corporation merged with JP Morgan. The hedge fund of JP Morgan Chase is the second largest hedge fund in the United States, and it is developing more business in overseas markets, like Shanghai, since Chinese regulators have restarted the Qualified Domestic Limited Partners program to allow global asset companies to raise funds from Chinese clients and invest in overseas hedge funds. JP Morgan Chase reported the net revenues of $99 billion in 2017. Morgan Stanley is an international financial service company founded in 1935. It provides three main financial services. The first one is institutional securities. The second one is wealth management. And the third one is investment management, where the institutional securities has been the most successful and profitable business part all the time. Recently, Morgan Stanley announced that it will expand a new wealth management office in Phoenix. It reported the net revenue of $37.9 billion in its annual report. Finally comes to the Citigroup. It is the first financial group in the United States which combines commercial banking, investment banking, mutual funds, and other financial services. Citigroup is founded in 1812 and also headquartered in United States. In 2017, the net revenues is $68.4 billion. The feature represents the adjusted closing price for Deutsche Bank and its competitors. Goldman Sachs keeps the highest adjusted closing price in this period, while Deutsche Bank keeps a poor performance. Investment banks have recovered gradually from the worst performance since the 2008 financial crisis. We concluded several possible factors that can affect the stock market around the first half year of 2016 because of the coming US election and Britain's vote to leave the European Union. Most of the investors were waiting for a better time and didn't want to take the risk. The stock price performed surprisingly during last year due to the sweeping tax cuts President Trump signed to law and the Job Act. Recently, due to the new tariffs policy came out, the US stock market dropped sharply, but these investment banks performed beyond expectation. For the final part of the presentation, we will talk about recent events that is worth to pay attention. First news is about the new CEO of Deutsche Bank, Christian Sewing. He has been the CEO since April because the previous CEO cannot help stopping the bank's continually poor performance. However, as the Forbes magazine pointed out, reshuffling the staff on the Titanic cannot enable it to avoid iceberg. Christian joined the bank in 1989. Maybe the basic problem for the previous CEO is that his lack of authority and will, because the most powerful and important people is the chairman of the supervisory board of Deutsche Bank. The second news is Deutsche Bank is considering more cuts at investment bank. Much of the prior cutbacks at the investment bank influenced by fixed income trading, although revenue at the equities unit declined continually. The bank lost its clients in late 2016 amid concern about its financial strength. As part of the investment bank review, cuts were being discussed at big trading business, equities, fixed income, currencies, and commodities. They are expensive but didn't perform well. The final news is Deutsche Bank and JP Morgan agreed to set yen-libor lawsuit. LIBOR, which refers to London Interbank Offered Rate. It is a common reference point for floating rate commitments. During the past several years, many world's largest banks have paid billions of dollars in fines to settle allegations of reaching the LIBOR. The interest rate derivatives traders at banks, for example Deutsche Bank, communicated with others to look for a higher or lower yen libor to help their trading positions. This action badly undermines confidence in financial markets so that the governments are investing these scandals. Thanks for your listening.